It's Thursday, the 17th of December 2020. Welcome to the Fear and Greed Business Headlines. Business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. The Australian population is shrinking and getting older, creating significant challenges for government spending and business investment. That's our main story. Plus, Australia refers China to the World Trade Organization over Bali, super funds set to provide positive returns in 2020, and Bitcoin hits another milestone. Australians are having fewer babies, migration will be negative this financial year, and in a decade's time, the country will have about 1 million people fewer than if COVID-19 had never occurred. The findings are part of the federal government's first ever population statement, designed to help future government and business investment decisions. The key findings reflect the impact of COVID-19 on the population. The coronavirus impact is expected to be long-lasting and result in a smaller and older population in Australia than otherwise. Population growth this year will be 0.2%, the lowest in over a century. The number of babies being born has decreased, with a fertility rate dropping to 1.61 this financial year and 1.58 next financial year. And net overseas migration is expected to be negative to the tune of 72,000. That compares to 154,000 people arriving last financial year. Melbourne's projected to overtake Sydney as the country's largest city in 2026-27, with a population of 6.2 million compared to Sydney's 6 million. Australia's population is still growing though, and likely to reach 28 million by 2028-29, up from almost 26 million currently. But in 10 years' time, the Australian population is forecast to be 4% smaller, that's 1.1 million people, than it would have been in the absence of COVID-19. All the numbers are going the wrong way for economic growth. Most economies that have expanding populations, including Australia, do better in terms of long-term growth. Migration has been critical to Australia's success, from cafes and restaurants through to demand for housing, education and services. Businesses with long-term strategies assume population growth. It adds to demand. But COVID-19 has robbed the economy of that stimulus. Long after the health impact of COVID-19 has washed through the system, the economic impact will still be hurting Australia. Overseas news first up. The number of COVID-19 cases in Britain continued to soar, but Prime Minister Boris Johnson said he'll still allow festive gatherings over Christmas against medical advice. The UK has had 65,000 deaths, the sixth largest of any country. And Bitcoin has broken through the $20,000 mark for the first time. It's up more than 170% this year as investors pile in, believing it will become a mainstream payment method and has some resistance to inflation. Locally, Australia will refer China to the World Trade Organization, alleging its tariffs on barley breach global trade laws. Back in May, China imposed an 80.5% tariff on Australian barley, impacting $1.5 billion worth of exports. Canberra claims the move was politically motivated. China's also placed bans on coal, lobster, beef, cotton and timber, and imposed large tariffs on wine. Trade Minister Simon Birmingham said the WTO process could take years, but it was important to achieve a result that recognised the integrity of Australia's grain growers and barley industries. The Westpac Melbourne Institute Leading Index has hit its highest level in 60 years, suggesting a very strong run for the local economy over the next 12 months. There have been 2 new cases of COVID-19 in Sydney's northern beaches, both of whom are close contacts to each other. And a 45-year-old man who works as a van driver, shuttling airline crew between Sydney Airport and their accommodation, also tested positive. It's the first cases of community transmission in New South Wales, or Australia for that matter, since December 3. Superannuation funds are set to provide a positive return to members in 2020, despite the COVID-19 pandemic. Figures from Super Ratings show that the median balanced fund, which is the most popular option for investors, has delivered a 2.3% return since the start of the year. Infrastructure Australia has released a report that says the country will need to increase investment in waste recycling and broadband services and rethink how office space is used. The trends that will stick around post-COVID-19 include the boom in online shopping, soaring demand for telehealth services, lower demand for public transport, and a shift to online education. ANZ held its annual general meeting yesterday and Chief Executive Shane Elliott said the worst of the pandemic was over for small business customers and 9 in 10 mortgage customers who asked for a loan deferral were now back repaying loans. Meanwhile, neobank Zinja will close, with depositors to get their money back and the banking regulator to cancel the banking license. The collapse reflects the challenges of running a bank, and particularly a neobank, with a limited product offering and a very low interest rate environment. And Buy Now, Pay Later group Afterpay hit a record high yesterday of $116.07 a share after its inclusion in the ASX 20 and ASX 50 indices. This is a company which was founded just 5 years ago and created a whole new payment systems model. Incredible. That's the Fear and Greed business headlines for today. There's more on all of these stories in today's full Fear and Greed podcast, as well as an interview with Damien Cooley, MD of Cooley Auctions, about the incredibly resilient housing market. I'm Sean Aylmer. Enjoy your day.